All right, DayTraderRockStar here, back with you, and this is just a second follow-up video of the first video I put out today. And the first video really just kind of concentrated on what we look for in the first hour of the trade to kind of, in this environment, this market environment, in a very bullish, trending market. When you start to recognize flags, you start to see areas of, or even channels. You start to know the better areas of the channels to get in. We look for multiple time frames. We look at the stochastics. We look at the patterns. And we understand each and every part of this thing. There's only a few lines on the chart, and when those lines come into play, it's important to know what they are. So just going to update you on what we've seen since this level came in, and this level really represents this small little time frame here. This little time frame. What I'm going to start doing each day is actually mark off the multiple time frames, like the 1 minute chart is a very active chart, but we use a dual stochastic setting on that, so we don't have as much chop, and we can actually get a good rotation. So when the dual stochastics are set up, and we have a 5 minute setup, we're going to see a kind of a setup like this. This is the type of setup you're going to see. You're going to see a circle within a circle, and that's what I'm going to try to bring to you. Because at that point, if we look back at the S&P cash chart on the 5 minute chart, we waited for this, and it was right here, and this is the area that we liked so much. So we kind of pointed that out with the bigger circle, and understand that we had what was called a 5 minute and 1 minute setup. Now on top of that, we also had that 60 minute setup. 60 minute got back down to oversold levels, and we actually started crossing back up. So we could actually, it wasn't as nice as the 5 minute chart. The 5 minute gave us some other things to look at. First of all, we had a little consolidation there, and we looked for a drop off and then to get oversold, and then that worked out perfectly. The 60 minute, the crossover counts. It's great to see that crossover. We got a crossover here, kind of pushed a little higher. I mean, the momentum is driving us higher, but at this point, even though the 60s crossed over, take a look at that 5 minute chart now. The 5 minute now has rotated all the way back up here into an overbought level, and we're overbought, and we're kind of embedded. And embedded stochastics usually is a sign of strength, and you can see we actually did push at this point right here where the market started to get embedded. We actually pushed and drove higher from this point on, and pushed a little bit higher. Now we have to take a look at the futures and see that we just kind of pushed through that pivot area, through the and again, go back to that 5 minutes. So many different things I look at, and you take a look at that 5 minute chart, which we're on right now on the cash, and you can see the red line, which is that 200 period moving average. And we can just grind back and see how the price has reacted through the 200, back down through the 200, through the 200, back down, flush through a little, back up, back down, or all around it. So we're back to an area, we're trying to get through it, but we've had a nice run. And we know that once we get up into this zone, there's a better chance of a kind of a rotation back down. It happened here. It happened here. It's this bigger circle. It's just representative of something else. And then we're gonna see this start to happen here. So we are extended here. We are probably looking for a little pullback. And it's nice that we pushed through the 200. But now we look at this area. We look at the pivot area. We look at 2,000. There's a lot of levels here that are saying, all right, we've had a nice little move. Let's look for this little pullback. We're due for a rotation. Now, the only thing I want to say, there's been a lot of news coming out. We had the jobs numbers today. We had Obama just on the air. We have other things that are happening. We have a weekend, and sometimes you could get that trend, very strong trending day, especially on economic data like a jobs report today, which was less than expected, but in some cases that's a positive. So right now I'm going to represent this by telling you that we do have a 5 minute, 1 minute setup. So we're going to actually show that, and again, the sell side, I'm going to just do it a little bit different. I'm going to give you that 1 minute setup. We have that over, and then the larger square. And the reason that we're going to talk about the larger square, and I want to start putting that larger square in here, is because the market is very volatile. But you have to understand there's a level, and in stocks too. I want to show you some stocks today that might not be moving, but they're in the right levels, and it just sometimes takes a few days, and that's the killer of most traders. The market here is not doing what the traders want, and they want to just get that fast money. Yet they might be in good positions, but they just don't have the patience, or they just feel like it's not working out. Short time frames, yeah, totally different story. But like an example today, I'm just going to go over it. And again, APC is going to be a focus stock on the watch list. This one has not really just been working, but we recognized a nice flag. We got into that. We've traded it. It's pulled back. Everything still looks pretty good on this. Even though the tide has changed and the daily stochastic's pulling back, that 60-minute time frame has been very strong, and we're just crossing over. And take a look at this underlying trend line. That underlying trend line in that 60-minute time frame has just been another key example. And that big candle here on the 60s always helps. So whenever I talk about HPS on a shorter time frame, we look for that 60-minute oversold level combined with a reversal candle. And the reversal candle in this case is that hammer playing out here. So that gives us a better opportunity for a pop back up. And this is Anadarko Petroleum, but it's the same concept that we're looking at, of anything else. Even though it's pulled back here, it might not be performing, it's not ripping higher, but this is a great pattern. It's a great pattern overall. The 60s turning back up inside this flag. The flag should break out to the upside. We just hope, just had to bide our time on this one. The same thing with rig. I know a lot of people are kind of calling rig the pig, and I would have to say that too. But again, it's another situation. We have the divergence set up, and we got that crossover. It's pulling back. We're still kind of holding off the recent lows, and this typically is a situation where we do get that move and a pullback, and then it continues to move higher. It's just not moving fast. But these are two stocks that will be on the focus list this week, and just want to touch base on this setup once again, and we'll watch this, and I bet we could come back to here, and we can actually see us pull back here to that, just kind of gauge this out with the 5-minute to see the 200 period moving average. We'll see that 98.50 area brought to us by FT71. So not a lot of interesting levels here. And again, I'm going to start using this this technique where we kind of measure out multiple time frames. We have the 1-minute and 5-minute, and then we could actually add the 60-minute. This was actually a 60-minute crossover. And just remember that 60-minute time frame is going to take a little longer to activate and move. It takes 60 minutes to finish that candle, where if 1-minute candle, it's boom, boom, boom. 5-minute candle, it takes a little longer. 60-minute, of course, the daily time frame. So that's it. Another little update for you. And again, we'll get back to this a little bit later. Well, actually, I'll pause this. I'll come back to this just to see how this plays out. All right, just an update, and you can see we're actually chopping around this level, and I think it's good to use this larger area when we talk about a bigger time frame. Even though the short time frame here has been the larger time frame, the 5-minute time frame, could be embedded a little bit longer. So it's a couple more candlesticks, which are represented by multiple candlesticks on the 1-minute, but so it still looks good. I still say that this area has a better opportunity to pull back due to the multiple time frames, but the market seems to be starting to grind higher. And one thing we want to understand is this market has been buy-side, aggressive buy-side, candidate. It's just people have been buying the dip. So this ends up being another situation where, is this another dip that just recently came back? And we're looking at rig here. I'm not the biggest fan on rig. We're going to talk more about that too. But let's see what happens here. BP had a little pop, ring had a little drop, and the market here right up just through the pivot area. S&P chopping around 2,000. S&P at 2,002 right now. And we're going to continue to watch this, but we're going to, again, understand that this is the type of time frames you're looking at. The 1-minute, you could really micromanage your thing, where the 5-minute, up in this zone, you're getting extended. And then we'll talk about the 60-minute, which hasn't given us that sell signal, but is very strong. So let's come back to this. All right, we can see us starting to, and again, let's go back to that 5-minute chart, and you'll probably start to see SPX here. Let's take a look here at SPX. Maybe starting to rotate over. Again, what we're concentrating on is last, understanding that the 5-minute setup is extended, and usually this does give us that pullback. Market's been very strong today, and right from our first entry, or first signal there, we kind of now embedded here. Yeah, this typically, you know, you're looking at this rising channel line here. Probably have some other things you could look at. You know, the retracement coming back here. Whenever I see this type of flag that plays out, and then you have this kind of breakdown, you look for that retracement to come in, and this really becomes another technical indicator. So this adds to the level here. This really does add to that level of a pullback, and would expect this to pull back here in that 2003, 2004 area of the cash, which will represent, you know, pretty much closer to that 2003, 2004 up here in the futures. So let's see if we actually get back up there and just pretend there's an underlying trend line like this. I don't know if you could see that even. I don't know if we could even see it on the futures now. And watch this. So they want that 203, 204 area. All right, we're right back. We're right up at this level. This is the level I actually wanted to watch out. I want to zoom out here because there is a big level up here. And again, I'm just kind of showing you this really on that 5-minute time frame. We're right up there. I just sent out a tweet on this, and you can see there was a decent upward channel here. Let me bring this up on the 5. Let me see. We got that. And you can, you know, we'll zoom out here. You can see this rising channel, really good rising trend line, an upward trend line here. We broke down, and normally this is a textbook area for a pullback, and it's just what we call a trend line retracement or a channel line. Whenever you break down, you retrace back up there, and this is just you don't see it like this set up. So we're going to pay attention to it. And we're going to go out to the 5-minute chart again here. And we're going to see that represented on the ES right at this level, right into 202, 2002 level, 2003 level. So, you know, even though this was the multiple time frame, because of that trend line, this really all plays out again at this level. And you know, I should have noticed that before, but this trend line is really key for me. So we're going to let this play out here. This is such a fantastic level. All right. All right, now you can see, well, we're starting to see a little pullback. I'm just going to update you on this. Starting to pull back from this level. Such a, you know, again, looking at Diamond Offshore here. Looking at a trade setup here. But again, going back to the SPX. And, you know, when we talk about trends and confirming trends, does this breakdown really, you know, have some follow through? The 60-minute time frame, very strong now, kind of crossing back up. The first real test here is this 5-minute retracement, 60-minute retracement, call it what you will. There's a beautiful retracement trend line. Nice bounce, and we're extended. So everything here pointed to a pullback. Everything. If the market actually breaks through this level, heads high, that's going to give us an extremely bullish signal. But I don't see that happen. I see this just as a nice pullback setup here. And remember, we're talking 5-minute time frame. This is not something you're seeing on the daily time frame where you're looking at, maybe from the next, few days here, you're going to pull back. All right, so I'm just going to touch back here one more time. This is just another special live video. I'm just recording. Looking at the markets. I'm doing research today. Normally Fridays I'm off the mic and I'm doing research, and I'm trading in the room here with the members and stuff. We picked up some stocks today, and I'm actually going to give you guys one right now. And again, I just want to touch base off of this setup here. It's very interesting. It's a trendline retracement. It's a big trendline retracement on this 5-minute S&P. I mean, this 5-minute could be transferred over to the 15, could be over to 60. I mean, you're still going to get that retracement. It still goes back far enough to see that. But the different momentum indicators lining up differently on different time frames. But the 5-minute, between the 5-minute being overbought, the underlying, the overhanging trend line or retracement trend line, those are two big reasons I'm looking for that pullback right here. And we are getting that pullback. So you can see the on the futures here, this area represented that 1 minute, the 5-minute, plus the trend line. Even though it did set up here before, when I see that retracement trend line, just like you see a setup at an HPS and you come near another, like a pivot area or an FT71 line, you really want to have them all line up, and you should take that position. So noticing that, just want to show you that, just for the record, this was a very good level to always watch for, especially retracements. Market's been showing some weakness, so whenever you get a bounce, your first kind of test is what caused that weakness. Was it a trend line break? What's causing the upward trend turn into a downward trend? You could see a series of higher lows. So once a downtrend is intact, you're going to actually see a series of lower lows, lower highs, as that continues to trend down. And so this right now represents this downward move. You have a lower low here since that previous low here, and the trend is now kind of reversed. So when you do have a breakdown like this of a trend, and this trend has been going higher, when you do get a breakdown, to really confirm that trend, you look for that retracement, that push back up. It has to retest the levels. And that underlying trend line that was originally broken becomes at a very important level. And you could see it right now, how important it was. How do you'd put that up there and you'd look at it, and each week you come to these stocks and you'd see these levels. How do you not react to these levels? Well, I haven't been trading the futures too much, so I don't react off of this level on the futures. But you can very easily see that the futures gives a great opportunity off of these levels. I like to trade the ETFs, so this could easily be a trade on any of the ETFs that track the market. But more even better is I like to figure out what the market is going to do. That way I could position my stocks to be in general, in sync with the market, because that is at least 60-70% of the game. It's when you have a market rising, there should be no reason why you can't be in some stocks that are going with it, as long as you get in the right positions. The right positions are defined as your high probability zones. And because you can still lose money in a bullish market by getting this, chasing everyone else, chasing it. Because even in if you move up here, the next thing you know, you get in here and it's down here, you're getting shaken out just for it to move back up, and it's just, eventually you're going to be burnt out and thrown in the gutter. So always understand the concept of momentum and the trend. So this is important to recognize. If this trend is going to hold over the weekend, is this the beginning of a pullback? I mean, this trend could end up being, it could be all kinds of things that are playing out now. A bigger picture could be a new trend line here. It could be something that's starting to build out here. I haven't really gone into detail yet on it. We're gonna, we want to see the end of the day, but this is what we could be seeing. If this starts to turn back here, you'll automatically start to put that channel line in and start to work off of this. And this could, so this becomes such a good level to watch, and that's why I'm just focused on. I want to do a special video on it, but I'm also going to throw you out I want to just talk about the diamond offshore and the rig. Both of these stocks have been, on my focus list this week. And RIG is really a divergence play, but it's in a stock that typically is, I call it a stock that suffers stock rot. You go out the last 2 years, and basically, if your overall trend is down, the stock is, probably not, not a stock you want to be involved in. Over time, I do understand there's great levels to be in, and we've been in RIG before and we've done well. So, it looks like this level we're starting to base out and starts to see a momentum shift because of the lane divergence. And we get a pull back into that. So it becomes a little more difficult at this level. It's like, oh, I want this thing to work out. I don't want it to break down. But again, like I keep on telling people, this breakdown would pretty much keep intact the lane divergence. I mean, we wouldn't make new lows since this low. We'd make new lows here, but we could actually turn back up. I mean, but we don't. We want to hold above this really 20 level. We want to cross back up now. I don't want to mess with this. So it is kind of weak, but it is there and it's in focus. And the other one is the Diamond Offshore. And Diamond Offshore just got triggered today on the HPS setup. And the HPS setup was basically, this is what gets sent out to the members. So we have the setups aligned for you. So if I actually, go back out here for a second and then bring it back up, when the original chart goes out, you're going to see a setup here, and basically that's the day I sent it out. And I said we have in the computer our buy zone set up here as an alert. Talk about it, and again, this goes along with my video that I put out with it. So I talk about this setup, and it's what I like to call a trapdoor trend line. And we have a definite area of support here, and you expect them to bounce, but because we have this 1, 2, 3 pattern, I call this a trapdoor, that we get kind of breakthrough support. All of a sudden, fear comes in. You flush it out, and you get down to this level. And it's just a nice channel that's underneath us. It takes out the lows. It takes out all the weak hands. Yet it has this underlying support, a channel support line down here, which is very hard to comprehend unless you're really looking for it. So now you have a great buy zone right here, and that's what we're waiting for. So today I just took that, and we could see that, we came down to that zone, and what's interesting about it is we're starting to see this big tail, and the tail's pushing back. We're staying within this. So the combination now, we have that trend line. We have a possible reversal candle. It's still early in the day, but we're starting to see a nice little candle here form whenever you have a nice tail. And we're getting a crossover here on the daily, and the 60s, hasn't even really started to bounce yet. So it just looks attractive here. It does look attractive. So I'm taking this, and it'll be a focus stock next week, right at this level. So that's your freebie. We'll go back, take a look at this setup. I'm going to probably send this video out and get working on this week's watch list. But as you can see, this is a great level. We're starting to pull back. Everything looks, if you can just recognize it, become that machine. Don't worry about what else, what you believe in. But just tell the more evidence you have up here of a pullback, and the more evidence down up here you have for a bounce, and the odds and the probabilities, that's what you want, All right. So, I want to let this off. By the end of the day, this could be all the way back down here, but you'll get the the update on the watch list tonight. So, I'll talk to everyone after the markets.